Welcome to this week's special presentation titled Cherry Picking with the Near Perfect Indicator. My name is Todd Shaffer, Manager of Research for VectorVest. I'll be your presenter this evening. Identifying stocks with rising price patterns couldn't be easier when you have VectorVest. Tonight, I want to demonstrate how sometimes easy is actually easy. If that sounds attractive to you, stay tuned. As we've been discussing recently, VectorVest believes in buying safe, undervalued stocks that are rising in price in a rising market. As we demonstrated last week, the easiest approach to making money with VectorVest is leveraging the power of our VST analysis and the power of our graphing tools in VectorVest Simple. Favor stocks with persistently rising price and earnings patterns. Now, some people are intimidated by the cherry picking process because they aren't confident reading graphs. Tonight, dare I say, I want to help you make VectorVest Simple even simpler. Let's open our toolkit. VectorVest Simple begins with top VST stocks. So let's look at the stock viewer. Click on the Viewers tab and then choose Stock Viewer. And Stock Viewer is just a giant spreadsheet of all 9,121 stocks we have in the VectorVest database. And we're sorted VST descending. This sort brings the stocks with the strongest VST scores to the top of the list. The stocks that have the best combination of relative value, relative safety, and relative timing. We lean on the power of that analysis to then cherry pick from this list the stocks that have the best demonstrations of persistent price and earnings performance. So let's click Graph All. And I've chosen from our Graph Layout tool the VectorVest Simple Graph Layout. On this layout then we have the price of the stock, the VectorVest stop price, RT, and the earnings per share data. And we want to favor in particular stocks whose price pattern is going bottom left, upper right, smoother the better, driven by earnings per share performance is going bottom left to upper right, smoother the better. And so just flipping through the graphs, you can make a quantitative analysis just visually looking at those patterns and select the best patterns out of the group. And that's a very intuitive process because we're visual beings and our eye is very good at recognizing patterns and discerning trends. So easily, if I take a freehand line, price for STRL is certainly higher than it was a year ago. Although I also recognize it didn't just go straight up, right? It advanced, it pulled back, it advanced, it flattened, advanced, pulled back, advanced. So while the overall trend has been upward, the best time to be buying the stocks, if we're buying rising stocks in rising markets, is not when the stock is pulling back, but we want to capture these moments when the price trend is improving. Now I can look to the price action itself and see, am I hitting higher highs and higher lows, the definition of an uptrend. I can also use our RT indicator. Let me delete that line. If I put on our date line, when the RT is above 1, price is trending upward. And of course, the higher it gets, the stronger that trend. So uptrend, back to downtrend, quick little turn here, uptrend, downtrend, uptrend. So a nice correlation between that RT analysis and the trend of the price action. And of course, the times when we're above 1 and rising have that strongest correlation with positive price movement. In fact, that rising price action, accelerating price, I'll put stop price back here, becomes part of our buy rating requirement, is that the price is not only above stop price, but accelerating away from it. When those rules are met, VST score above 1, RT score above 1, that's when you can get a buy rating on the stock. And so the correlation is very strong. When that RT performance is actually slowing or flattening, that can be a precursor to a pullback. So bottom line, the best entries are therefore when RT tells us the price is rising and accelerating. Best exits are when RT falls below 1 and the recommendation profile changes to sell. And this is where it can get tough for some folks because the price and RT lines are jagged and a little hard to read if you're not used to or skilled at reading charts. And here's where the near perfect indicator can really help out. I'm going to change the layout of my graph. So I'll open the graph layouts button. The NPI near perfect indicator layout, I'll click on it. And that changes the layout. By default, on the graph, you'll have the price of the stock, two moving averages of the VectorVest stop price, a 5 and a 40-day. On our subgraph, moving averages of our RT indicator, a 5 and a 40. Now, admittedly, my prescription for tonight is an off-label use of the NPI, and I'll share a resource with you to learn the standard approach for study at the end of the session, if you'd like to dig deeper into that. But I'm going to modify this layout, taking off the moving averages of stop. So here's the graph layout as we're going to use it. Now, let's focus on the RT subgraph here. Remember how RT was all jagged? Let's take off the moving averages. I'll just put on RT. Remember how that was all jagged? The 5-day moving average of RT really smooths out that line and makes it much easier to read, particularly for those who aren't practiced at reading charts. Now notice when the 5-day moving average of RT is rising, price is rising. We have that same correlation that we saw with RT. But the 5-day moving average is smoothing that out and removes that loudest noise that we are seeing in the RT line itself. Also notice that when the 5-day moving average of RT is falling, price is falling. Now it can still get a little tricky because sometimes a rise is just a bounce in an otherwise consolidating or downtrending price move. And sometimes a pullback is simply a consolidation or just a pullback in a longer uptrend. So if we add back in that 40-day moving average of RT, if we wait for the 5-period moving average to cross above the 40, we can almost eliminate those head fakes. So let me add a date line, and let's buy when the 5-day moving average is above the 40-day moving average of RT and rising. We'll stop buying when it flattens out or starts pulling back. So we had a couple turns here on STRL. I'm buying here. I'm buying here. Did have a little whipsaw here. And I'm buying here. It's doing a very good job of giving me a binary signal, a go, no-go gauge, identifying rising and accelerating price action. Using this same tool set, I can manage the trade. If the 5-day moving average starts to flatten or pull back, yes, I've stopped buying. I won't enter at that point. But I don't want to close the trade either necessarily because it might just be consolidating or having a minor or a regular normal pullback in the price action. But when the 5 crosses back below the 40, now we can become defensive. And there are a couple ways to do that depending on how aggressive you want to be. It could be as simple as tightening your stops. Could be taking some profits off of the table. You could close the trade entirely. You could sell covered calls to defend the position or buy protective puts. And you might stay with the position defensively until you get that sell rating from the VectorVest system. So these are the seeds of our very simple approach. When the market's rising, in other words, you have a bullish timing signal in the VectorVest system, buy stocks when the 5-day moving average of RT is above the 40-day moving average of RT and rising. Good entries are any time that 5-day is above the 40 and rising. Better entries are mid-cycle or better after the cross, still trending higher, of course. Best entries are early in the cycle, near the crossovers off the lows. And remember, avoid buying when the 5-day moving average of RT is flat or down. Using the same tool set to manage the trade, if the 5-day moving average is below the 40-day moving average, it's time to become defensive. And being defensive means that we can tighten our stops, we can sell some of the position, we can close all of the position. You can defend the position by selling covered calls and or buying protective puts. If you're defending the position, then use our sell recommendation as gospel or guide as your final line in the sand. Then simply rinse and repeat. So let's take a look at a couple examples. We'll go back into the program. Let's go back up to the top of our chart. And we're looking at a 1-year time frame on each of these stocks. We got our first buy signal here on the crossover end of July. We continued to be able to buy until we peaked. At this point, we stopped buying. We became defensive on the bearish crossover and ultimately closed the position. Our next buying opportunity here in October. Price rising, RT rising. It finally starts to pull back. We stop buying. Crossover becomes defensive. Sell rating closes the position. So that's the rhythm. Our next entry here on the crossover. Become defensive. Re-entry. Defensive on a pretty strong pullback here, so I don't mind that at all. And late cycle entry, as we haven't really been able to take on much of an uptrend of that 5-day moving average. Who's next? ACLS. We came in on the graph on the left side. The crossover's already happened, so we're buying into that peak. Stop buying, become defensive. We're buying. Stop buying, become defensive. Buying. Look how price is rolling over here. RT is pulling back. So we've stopped buying. We became defensive. Here's our crossover into the most recent cycle. Now let's find a chart that's not as pretty as these that we've been seeing so far. Let's see how it works on something a little uglier. Celsius, I hope you agree, a little uglier. Right, so we had RT had peaked. Right, it's not, the 5-day moving average isn't making any progress here, so we had already stopped buying here. That puts us in defense mode. Our first buying opportunity, crossing off of these lows. 5-day moving average of RT peaks here. We become defensive. Our next buying opportunity here. 5-day moving average of RT peaks here. And we become defensive on the bearish cross. And finally, let's take a look at Modine. MOD had this long period of consolidation, but a lot less volatility than we saw with CELH. Remember, we're still looking for stocks that are going bottom left to upper right, smoother the better. This study is helping us find better entries into that price action. And we see here on Modine, we had the bullish crossover. 5 MA of RT peaks, so we stop buying. Become defensive. Right, ultimately that closed the position. Our next entry is here. And this is interesting, I think. And look how the study helped us manage this trade. The 5-day moving average of RT peaks here. So we've entered sometime during this uptrend. It's now too late for entry as the price is flattening out. We become defensive on the position with the crossover below the 40. So if you're aggressive and you closed out that position, well, you might be okay because this thing really consolidated for 1, 2, 3, 4, 5 months before we saw this most recent move. If, however, you simply became defensive and stuck with the trade, you did have another price rise while the acceleration was still slowing by virtue of that RT analysis. Ultimately, we did finally get to a sell rating here in March. And our final buying opportunity comes after the downtrend ends. We start reaccelerating to the upside in this most recent turn for a nice entry off of the lows. So now we have a tool set that helps us identify more easily when price is rising and accelerating, the best time to be buying and owning a stock, and also when that trend starts to fail, the best time to become defensive and perhaps even close the trade on a very easy to decipher rules-based system. Now, I promised you I would share a resource with you. Stan Heller, the developer of this NPI system, did a special presentation on August 5th of 2022. This recording is available to you in the Special Presentations archive you can access through the Views tab in the program. Identifying stocks with rising price patterns couldn't be easier when you have VectorVest. The VST system identifies good candidates for all disciplines. The graphing tools make it easy to confirm the best choices. Sometimes easy is easier. Thanks for watching.